What's up, everybody? Welcome to the September 29th, 2025 IndiView Weekly Market Update. I'm Jeremy Bryan, and this is powered by IndiWealth. Today, we're going to get right into the hot button issues that are happening in the markets and just what we see going forward. So let's get right into it. First off, we have a government shutdown looming. I won't bore you with the details about what is looming, what people want, what they need, all that fun stuff. I want to spend a little bit more time talking about the impacts of shutdowns in the market. Really, if you look at the historical shutdowns, we don't have a ton, right? This isn't what I would call statistically too valid. I mean, there's been less than probably 20 in the last 20 years, certainly. So from that side, we don't have concrete evidence, but we do have enough evidence going back to the 70s of, what the market's reaction was. And you can never take past as perfect indicator of performance, but it does provide at least some historical context around it. And really, if you look at the numbers, the basic thought is there is usually some sell-off either slightly before or during a shutdown. We usually do experience, but not an aggressive one. This isn't like what we saw in April, where we go from to a bear market pretty quickly or get really close to a bear market pretty quickly of a 20% decline. You don't usually see that during shutdowns because these shutdowns tend to be relatively short-lived. So what you do see, the evidence would suggest that you do see a little bit of a correction, whether that's, even as little as 2% to maybe close to 5% in a decline scenario. But really over longer periods of time, if you look at the 12 months after a shutdown, you really can't see much of impact on it. So these tend to be short-lived and they tend to not have long-term influence on market behavior. The market does, really what it erodes is confidence more than anything. If you see the most impact, it's probably in confidence. But as I've talked about before with regard to confidence, you really do have to pay attention to what we say versus what we do. And so from that side, if you're looking at it from a confidence side, we could see some reduction in confidence. And, and a lot of government jobs get suspended during that period of time. So it's real for them. There's no question about it. But from a stock market perspective, if you just look, usually you do see a little bit of a blip, but it tends to be a blip and then back to normalized trends, if you will. There's nothing sustainable on this. Again, could this one be different? Absolutely. We could see things, if this becomes a protracted decline, or we see significant government, President Trump has talked about significant government cuts and firings, is how he put it, if we were to shut down the government. Could that have an impact? Absolutely. I mean, the government is a large employer. So if we massively reduce jobs based upon a prolonged shutdown, we have spending concerns, this could lead to that. But I think that's a much more minor case scenario, or a much lower probability, at least, compared to just kind of maybe a little bit of noise in the interim. Short term, they come to some compromise solution and the market goes back to paying attention to what companies are doing. That's really our base case scenario right now, but we'll let you know if that changes. Number two, gold continues to skyrocket. This is interesting to me. For those of you that have heard me and listened to me before, I'm not a huge fan of investing in gold. If you want a portion of it for diversification and all that stuff, that's absolutely fine. Like, I don't have any problem with it being a small component of an overall portfolio. But gold does not throw off earnings. It does not, you don't own anything besides a brick that you're hoping to sell to somebody else at a higher price later on. It's a very speculative market. Which again, it's fine to have a small piece. Again, it does tend to diversify. I have less, if you're a gold bug because doom and gloom is happening, and so you want to own gold, and especially physical gold, we really do need to have a conversation about that, because I don't agree with it at all, because I say something very simply is, if truly the market is falling apart, why is your gold brick worth more than other things such as food or ammunition to protect yourself? So, there are other elements of, hedging and that kind of stuff that are involved, but I cannot deny the performance of gold over the last couple of years. It was up 27%, I believe, in 2024, and up 40% so far this year. So it has had a really, really strong rally after being for lack of a better term, somewhat of a dead asset for a longer period of time. A lot of volatility, not a lot of substantial increase. Over the last couple of years, that has changed quite a bit, is that we've had a very substantial increase over the last 18 to 24 months in gold. So, what does that mean? Really, what it means, why is it happening, is you're seeing central banks, because of the dollar, because of the concerns of tariffs, because of the concerns of trade, central banks around the world have been trying to diversify their currency holdings, and gold is considered an alternative currency. And so they've been buying more gold to offset some of the, heavy amounts of US dollars and things that they've held before. They're transitioning into other currencies to try to diversify their streams. I think that's the biggest component of buying. Because if you look from an overall demand structure for gold, it hasn't changed aggressively, at least aggressively enough to justify this level of price increase. So why I'm a little concerned about this, and again, I probably would have been concerned about this last year, and we've had a 40% rise from there, is that this is demand that eventually will taper off, right? If you're diversifying and adjusting your currency, apparently you get to a point where you've done most of that work. And then, so there's the incremental buyers just not there. And as I said before, the demand isn't exactly skyrocketing. Now, demand for gold ETFs is, but that's price chasing. People are seeing, oh, it's working, I'm going to buy some of that. Again, the classic buy high, sell low type of thing that people can get caught up into sometimes. So from my side, if you own gold, you've been a beneficiary of it, great, outstanding. I would not be buying more here. And as a matter of fact, I would probably be trimming my exposure more than adding to my exposure of gold right now. And again, if you're more than 5%, maybe even 10% in certain scenarios in gold, I would just like to hear the rationale as to why. Again, the rationale right now over the last 18 months is if you picked it right, you have been phenomenally rewarded for it. The question is now, what are you doing with that reward? And if you didn't own it now, are you buying in? I would not be an aggressive buyer at this point. I would be more of a trimmer if I held it a little bit more right now, or a stay on the sidelines if I didn't own it at all. Turning to 3, not a lot of incremental news here, but we are closing the quarter here. So we're closing the end of September, which is a close of a quarter, which means you'll have earnings starting in October. Not a lot to report here right now, and honestly, not a lot of reports next week. It's usually the week after where you start to hear financials start to report. So you'll hear more about me This is where I like to look at companies. This is what's important to me. And again, there's some discussions out there whether we go to a 6-month cycle or a quarterly cycle. I covered that before. If it were up to me, I would stay on the quarterly cycle. I don't think the market would severely negatively react to a 6-month cycle if that's what we were to go to. I just like more transparency, and I like to hear what's going on from the companies. So I like a quarterly cadence. So from my side, if the companies are reporting this quarter, I want to hear what's going on in the overall economy. And again, I do like that financials kind of start the process because they tend to be in everything else a little bit. So you can start to build up, okay, what are they saying? How's loan growth going? How is consumer spending going? What are they looking at as far as the overall economy? Because they tend to be influencers because, again, everybody goes to a bank to access capital. So they'll be starting not next week, probably the week after that. We'll get a little bit more of the companies reporting, but that is on the horizon. Lastly, and on a private or on a personal side, I revisited Friends. So I watched Friends over the last, I don't know, it took me a while. There's 10 seasons. And I always forget that, shows from prior to 2010 had a lot of episodes, right? Network television was like 15, 20, 25 episodes, and sometimes per season. And so there's a lot of episodes of Friends out there, but I did revisit it. It's on HBO Max. And so I streamed it. It still holds up. For the most part, it still holds up. I'd say it's an 80-20. 80% still funny, still good. 20%, you can see some of the attitudes have changed. I mean, that show aired from 1994 to 2004. 20 plus and almost 30, or it was 30 years ago when it began, 20 years ago where it ended. So the attitudes have changed, and some of the philosophy, some of the jokes, and some of the things that they do is probably wouldn't be on a network television show program at this point now. But for the most part, it is still pretty funny. They still, the interactions between them are great. And then I did actually rewatch the reunion episode that they just did in 2021, I believe, where they came back, and all six of them. This was before Matthew Perry unfortunately passed, but he was there for that one, and so that will be the last time that all of them are together in an interview type of format. So it was a fun little bookend to revisiting the show. If you were a friend, or if you were a friend of the show, if you were a fan of the show during the time, I think and you haven't seen it in a while, a revisit's probably worth it. I still think it's pretty fun. So with that said, I'm going to end there. Thank you very much for tuning in, and join us next week where we'll have our next hot button topics and the things we want to talk about. Till then, thank you much and take care.